So one of the things that I advise our members about is you kind of have a moral obligation to do whatever you have to do. I don't care if it's convincing them to move 100 miles. I don't care if it's helping them with their credit. You should have a moral obligation to do it now, because if they wait and they go, we'll just keep renting and we'll do it later, in 12 months, homes went up in value, income barely went up, inflation went up noticeably, and they're worse off. They're further away from homeownership. So I'm kind of curious about your thoughts on that from the credit side.
Well, from the credit side, I'm seeing record numbers of credit card debt, record amounts of credit card debt nationally. And it's confirmed by, any major news outlet, or the government even will confirm that U.S. credit card debt is sky high right now. And that is a huge precursor, because there are people that are not going to be able to get that turned around. And so I don't want to preach gloom and doom by any means. I'm just saying, from the credit side of things, when credit card balances increase, that's 30% of your credit score right there. So that starts to go. Once that starts to go and you can't keep control of that, then that leads into the 35%, which is your pay history, because you're going to start getting some late pays, charge-offs, collection, profit and loss, right? And so something's going to happen for people to turn that around. Our economy needs to turn around quickly, because I watched the news the other day and it was like, the economy is doing great. It's like, it's not. It's a credit card. Yeah. It's because it's delayed, because people are putting things on their credit card. So it still looks as if things are maybe okay, I guess. But nobody that I'm talking to is like, things are great, I'm loving life right now, and there's extra money. It's all. So I agree. It's time to put the pedal down. And the message that I don't think consumers understand, I know they don't understand. Even people that are getting qualified for home loans, they're like, oh, I love it that I'm going to be a homeowner. And I'm like, do you like it because of the equity that you're going to gain? And they're like, what do you mean by that? And it's like, the equity is what you're trying to get to, that turns a normal Joe Schmo American citizen into somebody who can create generational wealth through equity. And once I can explain to them that they're living in a piggy bank, that they can literally do things to help increase the value, but also just sitting in it will increase the value, and then get them to realize that basically, if you look at it from a different perspective, you get paid to be a homeowner, all of a sudden they're like, so I should never not be a homeowner. It's like, right. That's what I'm saying.
Well, it's interesting how there are some, that is oddly enough a controversial view in 2023, because like I know Grant Cardone's out there talking kind of anti-homeownership. Now, granted, he owns most of the homes that he wants you to rent, but there's a lot of people actually like that. Ramit Sethi, he's another kind of marketer / finance guy, and he even has a similar message. And so I can understand why consumers are conflicted.
Yeah, me too. And I mean, there are some good arguments to be made for renting, but our country a lot, I think, can be separated into like big cities, right? And then everybody not in a big city. And the advice that it might be good for someone living in New York, it just doesn't apply to other states, I don't think. And you're just never going to be able to convince me that owning a home, I mean, the psychological benefits that I know are there for kids. There's just so many ancillary benefits on top of building equity. And even if you look at like '08, right? Like people, the values tanked and so many bad things happened. Well, if they would have, I'm just saying, would have been able to ride that out, home values still went up. They just, if you zoom out on home values for like the last 100 years, right? They have like a little boop, like just a little one. And I know it didn't feel little in 2008. I understand that, but I'm just saying, I don't think it's ever been a good time to not be.
Well, frame of reference is important. I talk about that a lot because, like, we have this in the marketing world. Somebody goes, well, I haven't gotten any leads in the last 24 hours. Okay, well, what about the last week? Well, I've gotten 15, 20. Okay, well, that's life, and it's like, what's your frame of reference here? it's easy to make any one small window of time look like a horrible time. But if like you said with home ownership, if you zoom out, look at a year, 3 years, 5 years, 10 years, 50 years, it's like, holy shit, I don't know that there's a better investment.
Yeah, I don't think so. I mean, because here's what I'm looking at. It's not just the dollars and cents. It's the functionality. It's the quality of life. I can't live in a Roth IRA. I can't live in a 401k. I can't take vacations in a mass mutual, fund. I can't do any of those things. But while I'm building equity, whether it be fast or slow, I can come visit a property that I own. I can do so many different things with it that I can't personally put my hands on another investment vehicle, but I can come here, I can update the kitchen and make it worth another $50,000. So I just look at it differently, but I love home ownership and all of the great benefits that it brings for people.
Yeah, well, you're also providing a service that I think helps a lot of people experience that for themselves, which is necessary. And I would say, because this is one of the things too, like we get a lot of leads that we generate for our members, and from time to time, there will be a member that goes, I don't have DPA. I don't know what I'm supposed to do with some of these people. And, one of the things I think is just from an expectation standpoint, which I think is expectations are most like success or failure for anything, right? It's like, if you want to have a healthy marriage, they say low expectation, high commitment. But really, I think that should be, you could look at business, you could look at a work relationship, low expectation, high commitment. And so if you were to look at that expectation for the mortgage industry, the thing that I always explain to members is you have to remember that for most of the people you're talking to, these are average Americans. And the best way to kind of think about who the average American is go to your local state fair. That's your average American. That you're going to get some of the wealthy, some of the poverty, everything in between, fat, skinny, any, ethnicity. They're all going to be there. And so it's like, that's who you're serving. And so obviously, like anybody else, we all want to work on the affluent. We all want the A paper, easy files. And that's nice. However, it's also a red ocean. Everybody wants that and neglects all these other opportunities. And there's a massive opportunity.
Yeah. Well, and there's even more too. Like I look at it like, okay, if we're talking 640 plus business, right? You have every loan officer out there fighting you for it. Every loan officer fighting. The leads are more expensive, like maintaining the clients more expensive, all that stuff, right? And that's like what I call that like caveman mentality. I'm hungry. I go out hunt meat right now, right? Like I'm going to go get this loan. And I look at it like, haven't we evolved more to be farmers, cultivators, right? So all it is like you're walking down a row and whatever, pick your analogy, right? It's like, it's either fruit or it's seed. It's fruit or it's seed. It's fruit or it's seed. But we're throwing our seeds away. And we're like, I only want fruit. But you're not growing your own fruit. So you have to go out and pick it, right? And it's just like, grow your own fruit. Like these people that are sub 640, DTI not where it needs to be, whatever, they are eventually going to get a home loan with your help or guidance in the near future, without yours, with a competitor later, but they're going to get it, right? So now that we know that, shouldn't we just spend a tiny bit of time to just plant that seed in our own field instead of throwing it away, right? Like it's that simple.